Welcome to the DeFinity Market Strategy. I'm Paul Rodriguez of ThinkTrading.com, and I'm joined with Manu Choudhary. He's the CEO of DMA Link and the co-founder of DeFinity. Hi Manu, how are you this week?
Hey Paul, not too bad. How are you?
Very good, thank you. Very good. So we said last week, all go crypto. Here we are. What's been going on in the fundamentals?
Well, it's been a pretty boring week. Nothing's really happened. No way, actually, lots of things happened. So essentially, we had some really interesting news. ProShares launched the very first Bitcoin ETF in the United States, and it did phenomenally well. So launched on Tuesday, I think at 9:30 a.m. New York, and was listed on the New York Stock Exchange. And it traded, I think, just over $1 billion of volume in its first day, which is amazing.
Wow, I didn't know that. That's incredible.
It was incredible. So again, as we kind of discussed before, I am a much bigger fan of spot ETFs, not futures ETFs, and fundamentally the difference here is that the ProShares ETF essentially will allow you to have exposure to the CME futures. So, for instance, if you want to take a position where you go long, what they will go away and do in the background is they'll go and they take positions in the CME futures market. To hedge that risk of you going long and vice versa if you want to go short. Although it doesn't let you go short, which is interesting.
Right.
Even though you can go short in the futures, this one doesn't let you go, it's long only. Now, the reason that we've seen the subsequent move in the price is not to do with this $1 billion of trading volume. It's to do really with, I think, the positivity. And I think it says to the market that there is another dimensional legitimacy to digital assets because the SEC signed it off. And I kind of always knew they would because they always hinted that the first thing they would look at would be ETF backed by futures. Now, what's interesting about this also is that I think from memory, there's another 20 or 25 applications still sat on Gary Gensler's desk. He's obviously very busy.
Give him a call.
Doing SEC stuff, yeah, I'm sure he'll say Michael. But basically, there's a whole bunch of companies, and about half of them are looking to put together and execute spot ETFs. I can tell you this much: they've got somewhere between Bob hope and no hope of getting through, apart from one. So when it comes to ETFs, I love WisdomTree. I'm not affiliated with WisdomTree. I don't know anyone at WisdomTree. I just love the way they work because if you buy their gold ETF or their silver ETF or their platinum, they actually hold physical, unlike BlackRock, who do not.
Yeah.
So in a default situation, good luck getting your money back with BlackRock. With WisdomTree, actually you own physical.
Right.
So they want to do it, and they've got lots of experience, and they're awesome. I love the way they operate. They're very slick, very good, and I think they will probably get approval. So that's not going to happen, I think, for another 45 days from memory, from the end of September. So what does that take us? That takes us to the middle of November, I guess. So that's probably when it's going to be announced. Now, this is going to have a huge effect because if you see $1 billion of trading volume in an ETF, what that actually means is they have to go out to the market and buy those Bitcoin in order to fulfill that demand. And if you cast your mind back to, I think July this year, Coinbase published a paper looking at liquidity and depth of the market, and from their calculations, which I'm taking as gospel because I haven't looked at it myself, if you did a trade of $90 million worth of Bitcoin, you would probably spike the market between 2 to 4%.
Really?
If you multiply that up, that's one hell of a spike on a day. And if you think about it logically, the largest ETF that exists today, the spot ETF, is based in Canada. They manage about $1.5, $1.6 billion. And given the fact that the US economy is probably some 20 times larger, that means that there could be potential, at the end of the first year of trading, of having something in the region of, worst case, maybe 20 billion, best case, maybe $30 billion worth of Bitcoin, which is it's a decent slice of BTC to be having on there. So I think this is very positive. Again, I'm slightly cautious because these things typically are often indicators that we've been or at a point where we may see quite a large deep correction. I don't think that's the case with where we are right now, purely because this is a different phase of the cycle. 2017, 2 days after one day after the all-time high, you saw the launch of the CME futures, and that was when I started buying. So that was a fun couple of years. But yeah, but I think that was structurally that was very different. I think where we are right now, the move is being driven by institutions, and again, look, every single institution I speak to is basically moving forward with actually starting to trade Bitcoin. It's insane. A year ago, no one had any interest, and suddenly everyone's into it. And the reason they're trying to do it is because A, client demand is pushing them to, but B, because those that have half a clue understand what this actually is, and this is a great hedge against basically government mismanagement and the debasing of fiat.
Yeah.
So so long may that continue.
Yes, and debt ceilings being raised all the time and all that sort of stuff. So
Well,
yeah,
I hope they're raised again next time, because
yeah,
they
which
always
it's
seem to be.
well, it's actually a bit of a joke. I mean, what is the point of having a debt ceiling if you keep moving it? It's like what's the point of having a stop if you keep moving it? If you keep moving it, it's not a stop. If you keep
It's not a
moving it,
stop.
it's not a stop. If you keep moving the debt ceiling, it's not a ceiling by definition. It doesn't exist. But no, that's really interesting stuff. And is there any other news out there that you think is worth sharing, or should we go over to the charts?
Yeah, there's probably one other bit of news that's probably worth sharing. So this is obviously something that we are looking to release, which by the time this video comes out, we will probably have done. But essentially, we announced was it probably about 2.5 months ago, that we were looking to we partnered with Axion AI, who are a phenomenal artificial intelligence company, to essentially develop some very cutting edge technology within the digital asset space. So we were initially looking at anomaly detection, which we've been beta testing.
Can you explain what anomaly detection is for people who aren't familiar?
Yeah, sure. So essentially, if you look at a set of data, and you essentially try and measure the distance from the average, or where the predicted values are, to the outliers, the ones that are the outliers invariably are probably created by a completely different mechanism to the ones that are not. So what this does is this basically finds those outliers and highlights them as being outliers and something you should pay attention to. So it's a really interesting way of looking at this, and without maybe going into too much detail, but we've used a methodology called isolation forest. I'm in the process of putting together a white paper with the guys at Axion to explain the methodology and essentially, why we're doing it, and the different forms of essentially technology that we've used to create the AI agents, basically. And again, one of the big things that we've done is we've done this using unsupervised learning, deep learning, basically. And the difference between this and supervised is that in supervised, I tell the AI, hey, this is an outlier, this is a normal bit of information or data. But the reality is the data set is so vast, so huge, I have no idea what the hell normal looks like. So we're taking the view to say, look, we'll give a large amount of data to the AI. The AI is better at making these inferences than humans. Let's let it come back with conclusions. Now, what's particularly interesting about this is that at about 1:24 a.m. on the 20th of October, it suddenly flagged that there was likely to be there was an anomalous trend it detected in Bitcoin. And obviously, about 12, 13 hours later, on the same day, we saw Bitcoin smash through the all-time high, which was very interesting. So again, this is not really a predictive model. It doesn't tell you the direction. What it does is it's a great risk management tool. So the anomaly detector is really not something to use to trade. It's really a risk management tool. So what it's there for is to alert portfolio managers that there is something potentially that could have potentially an asymmetric effect in the price. It could be a volatility event. And it's a very, very powerful tool to really try and hedge some of those risks by using this to have better timing. So for instance, if you're seeing very high signals, is it time to trade, potentially to manage your risk, to manage your portfolio? Then absolutely. And what we're doing is we're tweaking this over time and refining this over time. And we found when we do the statistical analysis that about 70% of the time, the anomaly detector is very accurate in predicting volatility events in Bitcoin. Weirdly, in Cardano, it's about 80%. I'm not sure why there's a difference, and I don't know why it's higher, but it's interesting. Then the data set, there is that difference.
Yeah.
And again, we believe that as we make this hourly or every 30 minutes, the accuracy and the power of this is going to increase exponentially. I mean, obviously, when you feed an AI more data, you can process a hell of a lot of data. It can come out with inferences that are exponentially more relevant and more accurate than if you have limited amount of data, as it currently does.
Yes, absolutely. And so at the moment, it's using end of day data, which is extremely difficult to make predictions on because you've only got one data point
per
day. But if you've got intraday data, that would make a huge difference.
Yeah, absolutely. I mean, look, there's all sorts of other factors we look at. So we've got the 6 core assets that we essentially that we use, which is Bitcoin, Ethereum, BNB, Cardano, Polkadot, and my favorite, Monero. But then in addition to this, we've got about 36 other cryptocurrencies. Obviously, no meme coins because I don't know. I don't know what the hell drives meme coins, but no meme coins, but actual other cryptocurrencies, bunch of other actually consensus data that we have in there, including a whole bunch of on-chain data, a whole bunch of financial market data as well. So it's a combination of these things that give the AI the ability to make these predictions. And based on the extremely limited data set we've given it, end of day data is very difficult to do anything with.
Yeah.
It's been able to make some very interesting predictions. And again, look, I need to demonstrate that these are more substantive, which is why I'm putting the paper together. But what it says to me is that the process behind this and the logic makes a huge amount of sense, and we think this could be pretty crazy. And this, by the way, is the first time ever that deep learning AI anomaly detection has ever been used in the crypto space. We're the first people to do it.
Amazing. And if you've got how can you get access to that? If you've got tokens, can you do it? Do you have to buy a certain amount?
So essentially, if you stake your DFX tokens, then you will be given access to the private Telegram channel. And the private Telegram channel basically every day at about 1:24 a.m. Not that convenient for people in Europe, but great for people in the States and Canada. But yeah, we'll basically give you the anomaly values. And look, we're gonna kind of tweak this, refine this. We're gonna take feedback and just make sure that the presentation is something that really works and is valuable for people that are trading markets.
Brilliant. I mean, it's obviously a work in progress, but it sounds very exciting. Superb.
It is absolutely.
Superb. So shall we go over to the charts, or was there any more
Sure.
news? I mean, that's pretty big news. Right. So where are we in the global picture of financial markets? Well, at the moment, we were operating from a reversal pattern that I'm going to show you in the S&P 500. So the S&P, the NASDAQ, and various very important markets that were leading the way up, like the Swiss market index, the SMI, all turned down very aggressively. And this was a good signal for me that we were heading towards a major top, and everything was going swimmingly until the last week. It started to push back up, and the S&P's now moved into a new high and just pushing through the new high. Now, that wasn't part of the plan in terms of a topping formation, so it's kind of sidelined my view here as with regard to a reversal setup. Now, if we take a step back, this could still be part of a larger reversal, but it has weakened the signal very substantially. So I'm going to have to take a sideline view until this clears up. Now, if we look at, say, the NASDAQ, we can see it's not into a new high yet. The Dow is in a new high yet. The Russell 2000 is only just starting to move. And the VIX index has just been pressed lower. It's broken my support line, but it's not into a new low as opposed to a new high in the market. So there is some divergence. The European stock markets are still looking very fragmented. The Swiss market index is way off its high. Again, this was one that was leading the way. The CAC 40 is off its high as well, but it looks like it might push up now. The DAX index is off its high as well, so that's not near a new high. But the FTSE is ready to break into a new high. So what we've got here is a really fragmented position. From a synchronized turn down, we now have got a sideways to upwards trading market. So I've got to be cautious that we're going to see another trend upwards. I can't be short the S&P here because it might blast up in another phase. So we have to put that to one side and wait for that situation to clear. With regard to the Asian equities, they have had a decent bounce. So if you remember the Evergrande situation, that hasn't actually, that spelt a low in the market. So there was a lot of buying that occurred once that was released as information. So from a downward trend, we're now breaking that downward trend and moving upwards. Now, there's still a lot of work to do. This has been a really heavy downward trend for it to reverse from a major point of view, but it is moving. So I can't argue with this price action. It's doing what it's doing, and I've got to respect it. There is resistance close, and this could turn back down again, which is kind of what I think will happen. But for the moment, equities are pushing high, and I've got to respect it. Now, gold and silver, they look ready to move higher. Base metals have been moving really aggressively, but gold and silver are only having minor bounces. Now, I share Manu's view on precious metals for 2022. I think we're going to be in a massive bull market, and we'll see silver eventually at $100 and gold at $5,000 and numbers like that. And if you're thinking that sounds crazy, well, then you should look at things like aluminium that have been in a massive upward trend, retraced very recently, but these trends have been so powerful. Copper as well, that's still in a major upward trend. Nickel is just breaking out as well, and that's in a massive upward trend. So why would you want to buy copper, which is used in wiring, and not buy gold, which is gold and silver. Silver is the most conductive metal out there. So silver's got incredible use for industry, if not for money. So I think that's one of the big anomalies in the market at the moment. That's why isn't silver higher? So of the main interest, of course, is what's been going on in the crypto space. Now, last week we talked about this last couple of weeks, we talked about this breakout of the 54,000 level, which was the kind of line in the sand for me that would indicate that we're into this massive bull phase, and a move to 100,000, which I was expecting next year. We brought it forward to this year. So we broke into a new high, and obviously we've had the announcements about ETFs, which is all good, positive stuff. But I do think that there will be a retracement that we can buy into, not a significant one, but a nice retracement to consolidate. Perhaps if there were some late players who jumped into the market in the last day or so trying to catch a move to 100,000, they might get shaken out as weak hands. We might see it back towards, say, 60,000, maybe at a push to 54,000, and then a move all the way back up to 100,000. So I think we're going to get this consolidation. I put in the weekly that we had this trend line, which has just been broken. So it's just broken it and touched the upper side of it. So it could go sideways for a bit and down and then back up. Now, look, I'm bullish on all of this. So I think if it all goes straight up, I'm happy. But I do think we should factor in a retracement into our strategy, because the markets rarely go up in a straight line, and it has just broken a new high, and there is quite a lot of hype around it, and that makes me slightly concerned, because usually when there's a lot of hype, you should increase your caution levels when it comes to trading. Same thing with Ethereum. That's touched the new high, and if there was an argument for looking at previous resistance and how markets trade, this is one of them. It actually literally touched the high and came off. Short-term traders would have sold against that obviously for a short-term gain, but it is still in this upward trend. So I think, like Bitcoin, there will be some rotation into the altcoins. So these will get sold, and then we'll get another move in the altcoins, and they're looking very interesting. I mean, Cardano hasn't quite moved yet, but it's being painted right into a corner. I'm not sure if this price action here is real. That could be just a bad price. But this triangular constriction has been going on for a while. Now, I would have thought it should have gone by now. But I'm willing to give it another week to play catch up, because that's how the market is sometimes. If you look at Solana, we talked about that last week on the show, and I was saying this triangular constriction, it should break out, and it kind of did it on cue. So I'm expecting Cardano and some of the other markets to do this in exactly the same way. If this hits the high, might see a consolidation at 2016, but it should go all the way up to about 300. So this trend is still good. Matic, again, I think this is one that one of our viewers asked about, and it has broken out as expected. It was in this consolidation. It's going to go to the high. This is a really nice little short-term pattern. So straight up, consolidation straight up, and the Matic. Sorry, this is the Matic network. Is exactly the same. I put that in the weekly. That's called Polygon now. I think they've renamed it, but this is a nice triangular constriction. If you want to compare the price action here and what's happened to what happened with Solana, you can see the technical patterns are very similar, which is why I'm expecting another breakout. So this is quite a nice little consolidation. I reckon it will go over this weekend, but This is just a probability. I can't say for sure. So remember, everything is probability. I might be wrong. It could go straight down. Nothing is 100%. But the technical patterns are looking very good for the altcoins. Perhaps a consolidation in the majors, but this trend is on. We are heading to 100,000. We should be there before the end of the year. I'm not saying it's going to be a straight line. There will be consolidation phases, but it's all really positive stuff for this this space and all the technologies. So I think it's an exciting time. So on that note, Manu, any final thoughts from you?
No, that's pretty much it, I think.
Yeah, brilliant. Okay, well, look, hope you have a great week. Thank you for listening, and we will catch you next time.